I think that also explains why gold is exploding, because as you might know, institutional investors and sovereign investors only flee towards gold when there's the smell of war in the air, or there's a smell of monetary reset in the air. Well, we've got both now, so I'm not surprised that the gold price is being revalued by market forces. You could see a revaluation by central bankers initiative, but this is just a revaluation by market forces. I think the real reason is that the price discovery mechanism is moving from west to east. The Shanghai Gold Exchange is now powerful enough to compete with the COMEX.
In an era of unprecedented monetary experimentation and geopolitical uncertainty, the role of gold in the global financial system has become a subject of intense debate. While many discussions focus on whether gold should return to prominence in international finance, Dutch investor and monetary analyst Willem Middelkoop argues that gold never left the global monetary system. It simply remained integral to it. Central banks worldwide continue holding gold reserves rather than alternatives like oil or Bitcoin, with holdings ranging from a few percent to 70 to 80% of total reserves, as seen in the United States. Recent trends in central bank gold purchases provide further evidence of the metal's enduring importance. Over the past 3 years, central banks have accumulated more than 1,000 tons of gold annually, representing a dramatic increase from the historical average of 400 to 500 tons per year during the previous decade. This acceleration in gold accumulation has occurred during a period marked by heightened geopolitical tensions and economic uncertainty, factors that have complicated decision-making processes for reserve managers and institutional investors worldwide. The United States exemplifies gold's continued monetary significance through its massive reserves totaling 8,133.46 metric tons, making it the world's largest holder of monetary gold. The Federal Reserve Bank of New York safeguards most of these reserves on behalf of the U.S. Treasury. Middelkoop concludes that gold is being re-recognized as a central pillar of global finance rather than making a comeback. He expects gold to play a more prominent role in the future and remain a key element of the global financial structure in the years to come. Gold's investment appeal stems from its performance during market volatility and economic uncertainty. As an inflation hedge and protection against currency depreciation, gold operates independently of government policies and monetary authorities, making it immune to the risks that affect fiat currencies. Before we begin, make sure to subscribe, hit the bell icon, and share this video. Your support helps us continue delivering powerful insights on gold, silver, and the global economy.
When people ask me if gold will come back into the monetary system, I would say it doesn't need to come back. It's already there. Look what all central banks have in their vaults. They don't have oil there or Bitcoin, or they have lots of gold. And almost all countries have lots of gold. And some only a few percent, some over 20%. The US has over 70 or 80% of financial reserves in gold. So gold has always been part of the current financial system, but it was ignored. And the US tried to use its Western friends to make them sell part of their gold holdings, telling them gold was no longer an essential part for the financial system. But what did the US do? They didn't sell any ounce themselves. Well, they don't have much to sell, because if you study the documents which point at the end and the collapse of the London gold pool in March 1968, we learned, and that these documents are known and published from inside, that Fort Knox was being emptied. There weren't enough good delivery bars available in Fort Knox in March 68. I think that's also the reason why Trump and Elon Musk are very silent now about a audit of Fort Knox, because if you would go there, you would find probably you would get a negative surprise. And I think Scott Bessent understands this very well, and he stoned them down, because this is just too important. And actually, I'm working on a presentation to show our audience, especially in the Netherlands, and our clients, what's really going on with Fort Knox and the New York Fed. Because if you study the pictures, I studied all pictures being published from Fort Knox and the New York Fed. It shows a gold facade, and I think I can prove it. And it, together with these historical documents, I would like to use that, and also for an official reason, because we had the Dutch accounting office, which needs to check to check the bills and the statements from the Dutch government, and our accounting office came out with news last week that they are doing a study on Dutch gold reserves, past and present. And actually, they asked the public to help them and come with input. So I'm preparing some input to help their research. So gold, to come back to a question, gold has been always part of this system. It's still part of the system, but it's getting more and more recognized that it's part of the system. And it will become a more central part of the system. And as you pointed out before, the banks need a revaluation of gold to help with their balance sheets. And of course, the US is the only one which is still using mark to market. So the US will likely, US is the only one not using mark to market, but the historical cost price. So the US might go mark to market. So that will help the Trump administration to use profits by this revaluation to become more active in Bitcoin, because I'm convinced that the Trump administration will use crypto as well. But gold will become will stay and become a very important part of the international financial system in years to come.
Willem Middelkoop attributes gold's current price surge to two key factors: escalating war fears and expectations of a monetary system reset, conditions that historically drive institutional and sovereign investors toward the precious metal. Gold has surged nearly 30% this year, approaching record highs, while outperforming stocks, bonds, most commodities, and even Bitcoin. The rally is primarily driven by Middle East tensions, particularly fears that the Israel-Iran conflict could expand regionally, disrupting oil markets and triggering safe haven demand. Middelkoop emphasizes that this price movement represents a genuine market-driven revaluation, rather than central bank intervention or manipulation. The organic nature of this rally suggests authentic investor sentiment and fundamental supply-demand dynamics are driving the appreciation. The surge also reflects increased demand from investors seeking wealth protection during economic instability and persistent inflation. As inflationary pressures erode purchasing power globally, investors turn to gold as a proven store of value that maintains worth over time, particularly when traditional currency-denominated assets face devaluation risks from expansionary monetary policies and fiscal stimulus measures. Let's get back to the interview.
I've been warning about a coming crisis in our monetary system almost ever since. I was a Dutch stock market commentator on Dutch TV between 2001 and 2008, and we always had these discussions in our team, in our editorial team, because these guys thought that I was nuts. Because Willem, why do you always cause problems? Because there's not a problem in the financial system. Well, then Lehman arrived. You might not be aware, but I published my first book only in Dutch in 2007. August 2007. That was the month the credit crisis started. And ever since, I've been worrying and I've been thinking about what would come next. And in that book in 2007, I wrote that I could envision that it might take another 15 years before this dollar-based system would reach really the end game. Well, I had 15 years, then you're 2022, 2023. And now we've reached the point that it's not the gold bugs warning that a monetary reset is next. If you look at YouTube, everybody's using the word reset now, and it's on main stage now. It's being discussed on main stage. I think that also explains why gold is exploding, because as you might know, institutional investors and sovereign investors only flee towards gold when there's the smell of war in the air, or there's a smell of monetary reset in the air. Well, we've got both now, so I'm not surprised that the gold price is being revalued by market forces. You could see a revaluation by central bankers initiative, but this is just a revaluation by market forces. I think the real reason is that the price discovery mechanism is moving from west to east. The Shanghai Gold Exchange is now powerful enough to compete with the COMEX. And I wrote a piece 6 months ago for OMVIV, which is a monetary think tank, London-based, that you could expect a short squeeze. And after the US has weaponized the dollar, I think we're now in the phase that countries are starting to weaponize gold. I'm not pointing to Poland, but I'm pointing to Russia and China. They do understand he who has the gold makes the rules. And even Trump has posted that exact line on his social media. So, and we come back to the point I made earlier. We're on main stage now. Everybody's talking gold. Everybody's reading about the history now and about the history of gold being the last man standing from a monetary point of view. There's not one currency that survived over 100 years and was unbacked. So all fiat currencies died. I made an appendix in the Big Reset. Actually, you can still download the book for free at our website. And in the back, you can find an appendix with all currencies which aren't around anymore and have been around for the last 250 years or have been in existence in the last 250 years. And there's not one which survived a longer period and back over 100 years. And I think the Dutch guilder had been around for 180 years, but most of the time it was gold backed, of course. Look what the Polish central bank is doing. Over 20% of the national reserve is gold now, and they started buying just a few years ago. We see many countries east of Germany, very interested in adding to their gold reserve. So once a movement like this starts, once a trend like this starts, it's very hard to stop it. I studied China quite a bit. Two of my books have been translated into Mandarin, and I traveled quite a bit there. So I think it's a fascinating country with a fascinating history. The system has been more or less the same for over 5,000 years. Gold has been real money for over 5,000 years, so they do understand gold. They had hyperinflation in the late 1940s, as you might remember. Actually, the Communist Party was able to, have a successful revolution because of the hyperinflation of the 1940s. So they understand this very well. And they are building this new trading system, and they know they need gold, maybe to settle bilateral trade, maybe to start a full-backed currency one day. I don't think that's their main goal, but
Gold continues to gain strength as global uncertainty deepens, with market forces, not central banks, driving its revaluation. Its rising prominence reflects both geopolitical tensions and a shifting financial landscape where Eastern markets play an increasing role. As the world navigates conflict and monetary instability, gold stands firm as a trusted store of value and a growing force in the global economic order. Do you think gold's rise is just getting started, or are we approaching the peak? Share your thoughts in the comments below. If you found this insight valuable, give it a like and share it with others who follow the gold market. Thanks for watching, and we'll see you in the next video.